I want to explain the reasoning behind my thinking. And what we see, so this is clear disinflationary trend in euro area, and not only coming from the increased levels of uncertainty that we are experiencing at the moment, but more in general. We have easing situation in the labor market. Yes, unemployment is at the lowest level, but on the other hand, we have lower job postings, we have declining compensation per employee, we have declining various aggregates of inflation, as well as the headline inflation have fallen to 2.2% in March and is expected to fall more or marginally in April again. So all this creates, this general macroeconomic environment where we have some additional disinflationary forces coming in. For instance, it's basically general knowledge now that the tariffs will have a disinflationary effect in the short term, not that much clear about the medium and longer term, but in short term, it's disinflationary. We have appreciated euro against the dollar. Not that much clear how it will persist, but still at the moment it's disinflationary. We have gas and oil and gas prices have fallen substantially by 13 and 30%. And it's already, so to say, coming in, penetrating in various inflation measures, and will have longer term effect again.
Right.
And not to mention that it's not clear that much at the moment what will happen with the Chinese goods, and to what extent they will come into the European market.
But to that point, Governor, excuse me, and apologies for interrupting, but to that point, given the uncertainty there, and looking at the timeline, the ECB is meeting in June before the end of the 90-day period, and before we might know whether there's a compromise between the Europeans and the Americans. Would the right approach in June actually be a no change in policy and keeping rates where they are?
Very good question. But as European and as the representative of the Euro system, I think we base our decision what's happening in the Euro area and not what the trade policy is of the US. So I think it's very much appropriate to take any decision that we think it's needed in June. But to conclude on what I was saying in the beginning, so I see many disinflationary forces coming in. So I think it's, in my understanding, it would be appropriate decision to proceed with the interest rate cut in June.
Very clear. How big, therefore, should that cut actually be? You've highlighted in the past that at this stage you're expecting 2 rate cuts this year. Of course, avoiding any sort of negative surprises here. What would it take to see the ECB cutting by 50 basis points in June?
That should really be a very negative surprise. We need to be surprised by something which I don't expect. I don't find this outcome likely. So I'm the proponent of, so to say, of this consistent interest rate cut by 25 basis points.
I want to show you a comment from your French colleague, Mr. Villeroi de Gallo. He said recently, and to your point really, that ultimately the trade policy from the United States is actually proving so far disinflationary for the Eurozone. So my question to you is whether, therefore, the 2.25% deposit rate is actually too high even at this stage.
Well, I think it's not about too high, too low, because there should be some reference value to which we, so to say, measure if it is high or if it is too low. And probably you imply this neutral interest rate, which fluctuates around 2%, but with pretty wide intervals. But I think we should not, so to say, base our thinking and monetary policy on, so to say, on neutral rate as such, because what we measure or what we determine, this is the interest rate, which is consistent with the inflation target in the medium term. And yes, I do think that we have disinflationary process. Yes, I do think that we have sluggish economic development. We have 0.9% growth projected by the ECB in March. IMF have reduced marginally the interest rate growth for euro area. this year, but also do expect, but because of the tariffs, because of the increased uncertainty, we'll have the revised projections for euro area again also at the ECB, and the economic activity will be slower than expected only a couple of months ago. So all this, as well as the disinflationary processes, makes me think that 2.25 is not that it's too high, but the further reduction is needed to be consistent with 2% target in the medium term.
Very clear. I would like to get also your thoughts, Governor, on what the impact of diverted goods from China for the Eurozone could have for monetary policy. How much of a risk is this for decisions taken at the ECB?
But you very rightly mentioned, this is the risk, because there are so many uncertainties. I would say there are so many unknowns, and this actually falls into this category because there are, it's really great tensions in trade, and there's very great tension of trade between US and China, and what we don't know how this will end up, and then we, so to say, continue on the second derivative. How these tensions will be translated into the so to say, into the trade between China and the Euro area or European Union. So yes, I do agree that this is a risk, but yes, we need to take into account, but it's still a risk.
It's interesting how, and I appreciate that it's very busy and very complicated to be a central bank governor at this stage, but from all of the risks that are on the table, whether that's US trade policy, whether that's trade with China, what is the theme? What is the risk that are you most concerned about when it comes to achieving the inflation target in the Eurozone?
Well, I'll explain you my thinking. So there are so many uncertainties, so many, as I said, unknown unknowns, even known unknowns, but also unknown unknowns. So out of this context, I try to extract what we know. And what we know, that this is huge uncertainty, which actually already penetrating into the economic activity. It's not about one or another thing, and these things are actually changing quite quickly. So, basically, it's even hard to follow them. But what we can learn from all this context, all the situation, that the uncertainty increased enormous levels. And this penetrates into economic activity, this penetrates into the disinflationary developments. And that's, I think, what's important. And that's what I do believe need to drive our decisions.
Governor Šimkus, I'm enjoying the conversation so much, and I'm going to try to squeeze one more question before I let you go. I was reading how analysts at this stage are actually expecting a terminal rate of about 1.5% in December, so by the end of the year. How comfortable are you with that range at this stage?
Well, in the dark room, you make little steps. One of my colleagues have made this quote, and I do believe that this very fits into our situation. We need to maintain full optionality, full flexibility. And Governing Council, therefore, is determined to take meeting by meeting data-dependent decisions on the best information available at the moment of a decision, right? So we don't have the predetermined interest rate path. And I know that markets, they expect one or another terminal rate, but actually this changes, again, it has changed throughout the year. So I do have opinion that it's plausible to have not only the cut in June, but also sometime in the future. It's plausible. Whether it will happen, we'll see.